Is part of that because of the fact there's still this, the thought that comes, the glob of people who have homeowners and they still have those low rates locked in. So there's no reason for them to refinance at the rates they are currently.
That's exactly right. And of course, when it comes to refinancing, there's two basic types, right? I mean, there's what we call in the industry rate and term. That's where you're simply trying to get a new loan to replace your existing loan, and you're simply trying to reduce the rate. You're not looking to get any cash out of the transaction. So we call that a rate and term refinance. The other primary refinance type, obviously, is cash out. You've got a ton of equity. You've got a mortgage on the home now. It's probably got a very low rate because you refied in 20 or 21, but you want to get to that equity. And so a cash out refinance is the other major transaction type for a refi. And so to the extent that there is refinance activity, I would say it's predominantly a cash out refi situation because of so many homeowners with so much equity, they want to tap into that. Now, the rate and term refis that are occurring now are really for people who bought maybe a year, 18 months, 2 years ago, where they probably ended up, again, they were probably a situational borrower. They had to buy a home and they probably got a rate that's in the low, mid, maybe high sevens, approaching 8%. Those borrowers, those homeowners, a rate and term refi can benefit them now, even at current rates. But that's a relatively small pool relative to all the homeowners. Majority of homeowners, as the media has talked about for months and months and months, this vast majority of homeowners that have these very low rates on their first mortgages, they want to tap into that equity, and that's why they're looking at the refi. And in some cases, depending on the relationship of the amount of cash out they want and the balance on their first mortgage, it may make sense to give up that low rate on your first mortgage and get a new one at current rates where we're at now, because ultimately that cash out amount is so large relative to your existing first mortgage balance, it makes sense to give up that rate, because if you go just the equity loan route, the rate on that, which is going to be higher, may overwhelm the rate on the first, so that your blended rate would actually be worse than if you just get a new first mortgage at current rates.
Makes sense. Well,